Welcome back. You're still tuned into Power Breakfast. Now, the big earnings that came through over the weekend on Saturday was State Bank of India with its second quarter performance. So Abhishek joins us with all of the highlights. Abhishek, this looks like a beat whichever way you look at it.
Well, yes, Pavitra, it looks like a beat on our poll and stress in the balance sheet has actually reduced. So what has worked in the result this time is that the asset quality is one of the best in last 8 years or even more, with gross NPA ratio actually declining by almost 20 basis points sequentially. ROE continues to remain above 20%, which augurs well, and watch list at just 0.12% of the loans is the lowest in last 13 quarters. The NCLT list also continues its downward trajectory. It's now at 5.2% of the book versus 5.34% quarter-on-quarter, one of the lowest that you are seeing in last 18 quarters. The restructured book at now 0.61% of the loans is just a 12-quarter low. International loan growth was pretty robust over here. 9.1% quarter-on-quarter growth is very strong and one of the best that you are seeing in last 5 quarters. The loan growth is at 12.3% YoY and about 3.25% quarter-on-quarter. This is slightly better than analyst estimate of around 12% YoY and about 3% sequentially. What has not worked in the result is that the CASA ratio has declined, and that's seen for the industry as well. So CASA ratio is at 28-quarter low. Net interest margin is the lowest in last 5 quarters, coming in at 3.29% versus 3.33% in the previous quarter. It is in line with analyst estimate. Analysts were baking in a 5 basis point decline in net interest margin. One-off expenses led to higher OPEX this time around. So cost to income ratio is at 5-quarter high of 61.4% when compared to 50.4% in the previous quarter. However, in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, Abhishek, thanks a lot for taking us through all of the highlights from SBI's performance. In fact, let's also listen into what Chairman Dinesh Kumar Khara had to say about the credit growth and the impact on the company's operating profit.
We have scaled up our provisions, which we were making provisions at the rate of 10% from November onwards, but now we have scaled it up to about 14%, and that actually took away about 3,900 odd crores. So that is one of the reasons why you would probably see this kind of a behavior. And in addition to that, there are some other one-offs also, which are essentially relating to the MTM write-backs. I will stick to the advice in terms of the loan book growth of we expect that our loan book should grow in the range of 12 to 14%. And that is the kind of the number which I would expect. Though, of course, this is a busy season now, and now we will get to see some better growth even in our retail loan book also.
All right, that is the word coming in from the SBI chairman. But with that, it is time for a short break. On the other side, we're going to shift focus from equities and talk about all of the action in the commodities market. That space remains extremely hot. So stay tuned for all of the updates.